At this point, we've discussed several regulatory topics in relation to Spain's regulated iGaming market. What we have not discussed yet is the market itself. Here to remedy that situation is Ed Birkin, Managing Director at H2 Gambling Capital, who came all the way from the UK. Ed, welcome. I think we're all very interested in hearing more about the recent performance of the Spanish online market, and since we'll be discussing a number of Latin American markets later today, I believe there's something you will say about that too. Thank you for coming.
Hi everyone, I'm Ed Birkin. I've already had the introduction. And thank you, Willem, for inviting us here today. Now, I had a quick look on ChatGPT this morning to ask how many slides you should have for a 30-minute presentation, and I was told it was 15 to 20. I have 45. So I'll be going through them very quickly, but all of these will be available to anyone who would like them afterwards, so please, you don't have to try and take notes or pictures. They will all be freely available to you. This is the legal stuff we can skip over. Or law firm probably should make you aware of it. What do we do? So at a very high level, we have gambling data, turnover, and revenue on 150 markets. We cover over 100 gambling operators and suppliers with news and financial models. We've just launched monthly operator market share tracking, as well as looking at monthly legal and illegal markets. We have deep dive market reports, and we have bespoke consultancy. So we'll be focusing on the top one today. So the Spanish online gambling market in numbers. So the total market in Spain, including lottery, is estimated to be 12.3 billion euros this year. However, the land-based market continues to dominate. So that's over 80% of GGR is still on land-based. And we expect the total online market to be the one that is showing the most growth. If you look at just betting and gaming and exclude lottery from this, which has very low online penetration, then the betting and gaming market still only has 23% of the market online. And the recent growth that's been shown that the regulator explained earlier, we believe that's been predominantly driven by a shift from land-based to online, rather than any significant expansion of the overall gambling market in Spain. And given the low online penetration, this is going to be the key driver for the online market going forward. If you look at Spain compared to other markets, so you have ones in the Nordics which have high levels of digital penetration, all the way down to Germany, which just has a complete mess of a market and therefore has a low online penetration. But other ones, if you're looking probably comparable around Italy, Netherlands, Italy particularly comparable because they also have a very large land-based gaming market and it is very much still a cash economy. You can still see that Spain has a long way to go for future growth of online penetration. Looking between onshore and offshore, so the onshore market has grown and we continue to see it growing strongly. So it's grown 65% in the past 3 years. As I said earlier, 48% in the past 2 years. But the offshore market, despite this, has actually grown faster. Especially in the last couple of years, crypto casinos have been particularly popular. So the onshore channelization has actually fallen slightly from 79% on our estimates to 77% this year. And we have the offshore market continuing to grow, albeit at a lower rate. So we're expecting the channelization, so this is how much of the GGR is through onshore licensed operators versus non-locally licensed operators. And we expect the channelization to stay roughly in the kind of 77 to 79% onshore. Now, how does this compare to other markets? It's not actually a bad level. We think there's still upside. We would hope that most regulators will look to get this above 90%. 100% is going to be impossible. Finland obviously only has the monopoly. They are going to be opening up the market, so that is why it is a very low onshore channelization. Germany's regulations are just very unfriendly to onshore operators and therefore not particularly helpful. Netherlands, as Willem touched upon, they have seen a big issue with deposit limits and adverse regulation, which has meant that half the market has moved offshore. So really, it's probably fair to compare them with someone like Sweden, and as you can see, Spain is doing slightly better than that. So not a bad performance, despite having almost a quarter of the market remaining offshore, but still room for improvement. So how do we get to these numbers? we don't just make them up, at least not entirely. So we've changed our methodology for getting the offshore estimates. So we look at it in two levels. We look at the activity channelization and then revenue channelization. So first of all, we identify all the licensed onshore operators, which for markets like Spain is very helpfully on the regulator website. And we calculate how much, we say, activity is going through these operators. So we look at web traffic, affiliate traffic, and then search data. We don't look at apps because we still know that over 60, at least through our surveys, 60% of revenue at least comes through web, whether it's through desktop or mobile web. And we've just found any app data to be highly unreliable. So look at web traffic, affiliate traffic, and search data. And then we do the same with the offshore operators. So we get affiliate data, which tracks about 12,000 different iGaming brands, see which are the largest operators targeting the Spanish market, and then do the same search. And this will give us a activity split between the onshore and offshore market. However, players who use the offshore market generally tend to spend more than the onshore market. Now, how much more depends on the market in question. If there's deposit limits, then it tends to be people who want to exceed the deposit limits who will go to these markets. If it is a market like Germany, and I feel bad keep having to go to Germany, but when you've got a €1 slot limit, it is pretty obvious that someone using an illegal operator where there isn't a €1 slot limit is going to be spending more money. So we use a bit of estimate of just knowledge of the market in general, but we also do player surveys, and then we'll look at what the average spend of the players who say they use more offshore markets than onshore markets. And by having this spend multiplier, that's how we get to a revenue channelization figure. So we're now tracking the data on a monthly basis. So Spain, obviously January, February, March, April is our estimates because we are yet to have the Q1 data. And we're tracking the onshore and offshore GGR on a monthly basis. And when we get, be interesting when we see the cross-operator deposit limits to see how this changes things. And as you see, it's the same chart, just shown in a slightly different way, that yes, you have seen an increase in the onshore market, but the offshore market is also continuing to trend upwards. So enough about Spain for the moment, and let's look at LATAM. We've focused on the regulated LATAM markets here, and it will be a very high-level overview. Starting with Argentina, so we forecast that Argentina will generate $2.8 billion of online GGR in 2025. It's not a very clear chart, apologies. Obviously, when looking US dollars with the high levels of inflation and devaluation of the currency, this can change quite quickly. We forecast only 40% of this to be onshore. In fairness, that's probably a higher number than most people. I've had lots of people tell me 90% of the market is illegal. We don't think it's that high. But the main issue in Argentina is the provincial regulation. So there are many provinces where there isn't any licensed operators or one or two licensed operators. And the only way to get over this is, I think, if some of the smaller provinces were to get regulation that were more aligned with some of the larger provinces like Buenos Aires, then operators will be willing to get a license in those markets. This is the equivalent of about $80 per adult or 0.4% of GDP. Brazil, we've just increased our estimates based on the latest tax data to come out of the market. They're forecast to generate $11 billion of online GGR in 2025. You can see quite a substantial jump given since the market launched. It really started to increase quite significantly once the regulations were announced a couple of years ago, but now the market's launched its more. We forecast 70% of this to be onshore, and we're going to be releasing more detailed data on how we get to that, because there is a lot of talk in the market, again, of the offshore market being much higher. The estimates out there was that 60% of the market was illegal. The more recent estimates is that 40% or 40 to 50 is illegal. We think it's around 30% based on central bank transaction data. And this is the equivalent of about $68 per person or 0.5% of GDP. The reason we're talking about those is I'll compare the markets in a couple of slides. Colombia, which has been regulated for the longest, they're forecast to generate $1.2 billion of online GGR this year, and 67% of this is forecast to be onshore, and that's equivalent to $31 or 0.3% of GDP. And then finally Mexico, which I know technically isn't Latin America, which is always difficult for me because when I put it in Latin America, and then I don't want to seem like an idiot when someone says it's North America, but everyone classes it like this. We estimate they're going to generate $3 billion of online GGR in 2025, and 83% of this is forecast to be onshore. This is predominantly because you have such a large number one operator there, and this is equivalent of $33 or only 0.2% of GDP. Peru just regulated last year, and again, we've just received our first bit of split tax data. We're expected to generate $1 billion of online GGR this year, and almost 70% of this onshore, which again is around $35 or 0.3% of GDP. So, how does this compare to Spain? So Spain has by far the lowest online spend as a percentage of GDP compared to any of the other countries we have just mentioned. And this is further evidence of the underpenetration of its online market that we talked about before. Yep, all of this will be available to anyone. There'll be an email, just email and get it checked. No, that's fine. I wouldn't expect you to follow all 45 slides so quickly. It was 52 slides when I woke up, so I have cut some out. Argentina and Brazil both have a higher spend per adult in US dollars. But again, relative wealth of the markets than we do looking in percent of GDP. But actually Spain does have the highest onshore channelization compared to the Latin markets, with the exception of Mexico, where there is very light touch regulation and also a very strong onshore operator. So, 18 minutes. So looking at survey data, so we've recently added player survey data to our data. So why are players playing offshore? First of all, we split our survey data into 4 different categories, because talking about an average online gambling player is just pointless. As I'll say in the next slide, this is probably underestimating and doesn't capture the very high spend players, and so therefore it's very useful to have the data point earlier from the regulators saying that 88% of revenues are generated by 15% of players. But we do look at the very high and high value players and how their attitudes and how their behaviour is different to the average and low value players. And also for operators, if you're looking to capture a player, you don't really want a player that is spending less than €30 a week compared to when you could be capturing one that's spending more than 300. So what are their preferences? As I said, in reality, the market is more skewed to high value players than our survey suggests. So actually in the UK, the top 1% of players are 25% of GGR, and the top 5% is 60%. Top 1% is 43% in the Netherlands, and actually the NFL data from last year shows an incredible 82% of revenues coming from just 3% of players, which is equivalent to 15% of players, as was just announced in Spain. So how many gambling accounts by player segment? Again, we show a lot of players only have 1 or 2 gambling accounts. So if we look at the total market, that is 78% of players only have 1 or 2 accounts. But again, this is skewed by the very large number of low-value players. And when the very high-value players, 50% of them have 3 or more accounts, it's not enough to win the player, but the share of wallet is key. So what impacts the choice of gambling operator? Now, the low-value players prefer ease of use, whereas the very high-value players make the choice based much more on availability of product. So again, it's not just about getting bonuses and getting people, which brand awareness, bonuses, welcome offers obviously are important, but getting a bonus offer to sign up a high-value player and then not having the right product just means his spend is going to go with one of the other 2, 3, 4 operators that he has a license with. Then we asked if they use unlicensed operators. And again, looking at the total market, we think is a bit pointless. So if we're using very basic, and we use this to sense check our more detailed estimates, but if we're doing very basic and saying, right, only licensed operators, so 100% of their spend goes through the onshore. Mostly licensed, we say 75%. Mixture of both, 50-50. Mostly unlicensed, we say 25% of their spend goes to onshore. And only unlicensed, obviously, non-goes to onshore. That would imply, just using the total, that 13% of revenues go through offshore. But if you look at the low value, about 10% of the revenues go offshore, but the very high value, 32% of their revenues are offshore, which again shows that the higher value players are the ones most likely to use offshore, and this then helps us redefine our estimates. And again, we use this to help provide some colour around what the revenue multiplier should be on the difference between onshore, offshore activity and revenue channelization. Actually, there is still 9% of players who said that they don't know whether an operator is licensed or not, which is actually low compared to some other markets. So why do you use unlicensed operators? Again, unsurprisingly, better odds and pricing. Bonuses are the main ones. But actually product, especially for the higher value customers, they believe there's better product. It's not just about pricing. Better product they're able to have with offshore operators. Often this is due to some form of product restrictions. And actually here, quite high came up as well, is not paying tax on gambling winnings. So deposit limits. Obviously, these have had a disastrous effect in the Netherlands, and we asked people their view on it. Now, they're generally viewed as a good thing. Almost all of the people think, or most of the people think, they are set at the right level. 25% think they should be at a higher level, and 15% think they should be at a lower level. It's unsurprising to see that the higher value players, most of them think they should be higher. What surprised me is actually what a low response was for people saying they're a bad thing that forces high-spending players to use illegal operators. However, this is based at the moment when you can circumvent them quite easily by using lots of different operators. It'll be interesting when we review this after the cross-operator deposit limits have come in and see how that impacts things. We then asked people their view on the gambling industry, and again by player segment. So gamblers in general tended to have a positive view, and higher spending players had a more positive view. But over half of non-gamblers had a negative or very negative view of the industry. Quickly looking at LATAM survey data. So we compared why you use unlicensed operators across a number of Latin American markets versus Spain. And in fairness, it's all pretty steady. Better odds and pricing, higher bonuses are the main driver across all nations. Brazil, more players chose having fewer customer checks, and I think we saw this anecdotally when the regulation launched and when they're having to re-sign up players with customer checks. That was a key driver of people deciding to use unlicensed operators where they didn't have to do that. And crypto we didn't actually include in our first survey in Brazil, but we're going forward. Crypto is a reasonable share, just under 10%, but actually in Argentina is the one market where crypto was a much higher choice of using illegal operators, which is unsurprising given the high inflation that we've had over the past couple of years there. Right, I've chucked in what I call a couple of fun charts because I think there's people who perhaps prefer sport to data. So we look at the split of sports betting in Spain. As you can see, it is predominantly football, which is kind of unsurprising. Tennis and basketball. Actually 4% on motorsport surprised me, but clearly higher, and then esports down at 4% as well. If we compare this to Brazil, where they also yes, it's similar amounts of football, but actually they have quite a lot on MMA. Boxing is much higher as well as futsal. I'd probably a bit fast and loose with the term fun charts, I admit. Now the split I thought was quite interesting of football. Spanish people effectively like to bet on Spanish football, which may say is no surprise. There's very much La Liga, international matches they're in, Champions League. There is very little wagering on foreign leagues. If you compare this to Brazil, yes, their Serie A is also the most bet on, but they spend 12% of revenues on the Premier League. They also spend more on La Liga, Bundesliga. So again, it is more of an international market. So for product, it is Spain, like Spain, and Latin markets also look across to Europe in terms of their betting product. Go on to a couple more serious charts now. So why do you gamble? Now, we've conducted this across lots of other markets. Generally, as a form of entertainment, it seems to be the largest one. To make money is actually much higher in Spain than we have seen in other markets. That's not normally as high as the reason people give to make money. To compete against others, we tend to find this for the high and very high players. They view it as a form of competition, and that's much higher for them than others. And to be sociable is actually always very low. So I know anecdotally some people like to say, gambling's a sociable activity. I mean, many players don't view it. They view it as an entertainment, but I don't think that doing something on your phone is viewed as particularly sociable. But the entertainment is a predominant form of why people gamble. Now, do you spend more or less than a year ago? Now, given the growth in the market, it is unsurprising to see that more people say they spend more than spend less, but it's particularly the very high-value players who are spending more than they have done a year ago. A lot of players believe they spend the same. Obviously, this is relying on survey data and people's own view on how much they spend. In reality, people probably spend a bit more than they think. But how much they spend is not necessarily an important question. It's how much they can afford to spend. And so has gambling caused financial difficulties in the past 12 months? So you can see for 86% of people, it hasn't caused any financial difficulties. If you include the not sure, 90% of people are completely fine. 10% have said it has caused you financial difficulties. And this increases as you go up with the amount people spend. Again, unsurprising, people who spend more are more likely to have financial difficulties. But this is why the regulations need to make sure that they keep these high-spending players captured within the onshore markets, where there are protections around them and help, rather than regulations that force the higher value players to the offshore market where there is no protection and no help, as we've seen in the Netherlands. If you look at this across other markets, again, it's pretty similar, where around 10% of players surveyed have said that they have not experienced any financial difficulties due to gambling. Brazil's a bit higher, a bit of an outlier. And interestingly, Mexico, which has the lightest touch regulation of all of them, fewest players have said it's caused them financial difficulties. So, to conclude on that, a well-regulated market should focus on high levels of onshore channelization as well as player protection. You can't protect a player if he is playing with offshore operators. And regulations need to take into account these high-value players who are more at risk. And basing regulations on deposit limits by looking at an average player ignores the majority of the market GGR. When regulators or politicians say this new regulation will not affect 90% of the players, you go, or let's say for sake of argument here, 85% of the players, you're like, well, that's great. But what about the 15% of the players who are 88% of your revenues? What you're actually saying is these regulations won't affect 12% of the market revenue. The regulator has a tough job. I know all operators and people generally like to castigate regulators and say they make life too tough. But it's a very tough job to protect players while not driving high-value players offshore. As we said, it does not take a large proportion of players to move offshore to see a significant increase in the size of the revenue generated by offshore operators. So conclusions. The onshore online gambling market in Spain has grown strongly, and this is predominantly due to the low online penetration and a shift from land-based spend to online spend. However, recently the offshore market has seen even stronger growth, leading to a slight decline in onshore channelization. Regulators have a tough job, and trying to balance player protection while keep players onshore, especially high-value players, is very difficult. I actually think, looking across 150 markets, Spain is doing better than most. And while I personally don't like blunt tactics such as deposit limits, because quite frankly, what one person can afford to spend is very different to what another person can afford to spend. Someone can have financial difficulties spending 50 euros a week, and someone can not have financial difficulties spending 50,000 euros a month. That's why I thought it was very interesting to see the algorithms and the more nuanced bit around risky gambling that the regulator's bringing in, rather than just relying on some blunt, high-level restrictions that we've seen in the Netherlands and which we're seeing in the UK. Pricing, product availability, and winnings tax are the key drivers in players choosing to use offshore operators. Although, as we've seen, deposit limits have forced mass exodus in the Netherlands, and therefore the level of the deposit limits is key. and we'll be following with great interest the impact of having the cross-operator deposit limits will have. And then LATAM markets that have regulated are actually doing a decent job, but they face the same dilemma in every market of player protection versus onshore channelization. And I think it's interesting, albeit it is only one example, that Mexico, which has the lowest touch regulation, actually has the highest onshore channelization, which makes sense. The markets where regulators tend to meddle so much are the ones that push players offshore. But also, despite having the lowest touch regulation, at least according to our survey data, it has the lowest proportion of people who are experiencing financial difficulties, which suggests to me that you don't necessarily need heavy-handed regulation to protect players, and it's about the more nuanced regulation that is perhaps being done with these algorithms rather than things like deposit limits, which is key. That's my email address. If anybody would like the presentation, we will send it to them. And I believe I've done that with 5 minutes for Q&A.
It seems so. It seems so. Thank you, Ed. And in addition, what to Ed, you said, if you email Sarah or me, we can also provide you with the PowerPoint of Ed today. I think we have 2 questions from the audience. Let's start with the first one. Ed, do you think Spain will catch up in online penetration? And if so, how fast?
So I suppose it's who you're benchmarking it against. There's 2 issues that Spain, or 2 causes of the low online penetration in Spain, I would say. 3, if some people would say, unfriendly regulation, which I don't really think is too unfriendly if you look at other markets. 1 is that it has a very high land-based business. So even if you have the same size online market in Sweden and Spain, then the online penetration is going to be much, much lower because of the base of the land-based market. So unless you have a collapse in land-based revenues, it will always have a relatively low online penetration. And secondly, and apologies if you disagree, my understanding is Spain is still very much a cash-based economy compared to other markets like the Nordics, and therefore this kind of is why people have been a bit slower on the uptake for online. So yes, it will continue to catch up, but I think you're looking to catch up around the levels of Italy at 32%. It's not me catching up with the likes of the Netherlands or Sweden or Nordic countries.
Very clear. Thank you, Ed. Second question I think we had from the audience. Ed, what do you think is the most promising LATAM market for new market entrants based on your data?
I suppose it depends on the size of the prize, really. So Brazil, just by its very nature, is the biggest market, so therefore it potentially has the most, but it is also the most competitive. And when the new regulations come in that stop people on benefits gambling, we'll see how much that impacts it. Our Argentinian data, we recently upgraded that quite a lot. That's shown strong growth. And if some of the smaller provinces do start to homogenize their regulations with the larger ones, then this patchwork can actually become a bit more like federal licensing, even though you will have to get licensed in individual provinces. Whether they do that, we're unsure. But also the Mexican market, again, we're seeing good growth and Peru. So I've just named every market really, so it's not particularly helpful. But I would probably go with Mexico, and we've seen there that although Caliente, is a very, very large operator, we think their market share has gone down from about 77% down to about 52%, I think, as other operators have grown share. So it is a market that you can take share in, but marketing spends, bonusing costs are extremely high, so it is a very expensive market and not an easy one to make money in. So I'll change my mind and say Peru.
Exactly. Well, there will be more about LATAM later, and we'll hear from the local people what they think to it. Ed, thank you for coming.
Thanks you for having me, Willem.